How did Trump only pay $750 in taxes? These rules. I had a client, while I was reviewing their taxes for the loan, I was just talking to them about how much money they made, how they made it, how do they file on their taxes. And they're telling me, oh yeah, I made this much money from my job and I made about $30,000 on a flip and so on. So in this section, we're going to talk about tax returns and how to not file your tax returns, or what's the improper way to file your tax returns on a flip. So I was reviewing his tax returns and he was telling me, yeah, I made about $30,000 on a flip last year. I filed it on my tax returns. I filed it my accountant filed it as a Schedule C. And I was like, what? He's like, yeah, I filed it as a Schedule C. I was like, why? He's like, I don't know. He specializes in real estate and that's the way he did it. And I'm like, that's not correct. So why is that not correct? Schedule C. Schedule C is a small business, how small businesses file their tax returns. Now you would think, wait, but I am a small business. I flip real estate. That's not the proper way or the best way to do it. This is why it's not. So Schedule C is if you're like, you own a lawn care business and you're small and you're not filing a 1120S. You have a lawn care business, you're a hairdresser, you're an Uber driver, you're something that's small, but you're in the business of you're doing the physical job, right? It's basically a job, but you own the job. You own the business, you're working the job. That is not the proper way to do an investment. So what happens in a Schedule C, and this is why financially it's a bad idea. So say you have a Schedule C and you make $100,000. And out of the $100,000, you have expenses of $50,000. So you made 50. So this $50,000, the IRS is going to hit you with a tax of 17% for Social Security and Medicare for the employee and as the business owner. So you get basically hit for both sides, 17%. Right there, you're gonna pay what? $8,500 in that tax alone. And let's just say you're in a low bracket. You're in a low bracket and you're only paying 15%, which guys, that's really, really low. Reality, you're gonna be in 20. So let's be real, you're gonna be in a 20% bracket. So if you're in a 20% bracket for your income tax, out of 50,000, that's $10,000 in tax. So in this scenario, where you made $50,000 in net profit from that flip, you'd owe $18,500 in tax. You gave the government all of your profit. And if you were gonna do this, you should have done an 1120S, which then would have saved you a ton of taxes. That's for another lesson. So I told you what they did wrong. Let me tell you how it should have been done right. We're gonna go back from the top again, just so you can remember where we left off. $100,000 in income, $50,000 in expenses, $50,000 in profit. $100,000 in income, $50,000 in expenses, $50,000 in net income. The wrong way was as a Schedule C, or the inaccurate way was as a Schedule C. The more accurate filing would be a Schedule E. Schedule E. It's kind of like when you're buying and selling stock. When you buy and sell a stock on the Schedule E, you put it when you bought it, the date you bought it, so the start date. You then put the end date, and the difference in time will determine if it's a short-term capital gain or a long-term capital gain. Short-term capital gain, you're paying about 20 to 25% in tax. Actually, I'm sorry. It's 15 to 25% in tax. In a long-term, I screwed that up. One second, guys. So, the start date and the end date. So if the start date and end date is less than 1 year, it's a short-term capital gain. Short-term capital gains is 35% in tax. Yes, 35% in tax. Short-term capital gains, less than a year. Long-term capital gains is over 1 year, and that is between 15% and 25% in tax. This is the same way you treat stocks. You buy Apple, you own it for more than a year, you're between 15 and 25% in tax based off of your bracket. Now, that $50,000 as a long-term capital gain on 50K, you're only looking at about $7,500 in tax compared to $18,500. That's an $11,000 savings. Let me repeat myself. As a Schedule C, there's a start date and end date. There's a short-term capital gains is 35%. Longer than 1 year, so long-term capital gains is roughly 15 to 25%. Again, consult your tax advisor and check on what is current market rates, because it changes from time to time. This is how you save $11,000. Now there's one more thing I would do to make it even better than this. So could you make it better than a Schedule C? Yes, because I would actually switch it to something else. I wouldn't even file it as a Schedule C personally. This is what I would do. If the business is only investing, right? You're not a remodel company, you're just buying a property, having someone fix it up, and then you're selling it for more money. You're just an investor. I would have it as a 1065. That way, you'll be at the 15% bracket, you can bundle a lot of deals, and you can have it as an LLC to limit your liability. Now, if you're actively participating in these deals and you're managing the project and things like that, 1065 wouldn't be very accurate or best. The most accurate one would be an 1120S. An 1120S, your income is at 15% as well. So you can, if it's short-term or long-term, it doesn't matter. It's still 15%. It can get higher based off of how much money you make. At the same time, if this is a passive income or active income, it depends, it'll change things. But roughly this 15% goes to your personal tax return. If you have other if you have rental income from rental properties that are in 1065s that are also passive income, and you have a negative number because of depreciation, that negative number from depreciation will write off the positive number from the 1120S from your flipping. They're both passive activities. So in that sense, you're now washing how much money you make. So the answer is, how did Trump only pay $750 or in taxes? These rules. Not very difficult for someone that knows what they're doing to set up. Again, I was being very quick with explaining this, so I know I got a little jarbled, but this is a very easy way to take it up to the next level.